All right. After quite a bit of review of what's going on, I've kind of compiled all the data and have come up with a fairly simple way to kind of handle everything. So I'll start out with first the strategy. It's kind of laid out, everything's in the screenshot. We'll go over each piece individually. A little bit has to do with setup, and then you just basically repeat the same thing over and over again. But the basic idea is to try to win more than lose, and we're kind of following the idea that you have to risk it to make it. And the one-to-one does kind of add things in our favor. Then we'll get into the strategy part, which will kind of increase our odds to make that better than 50-50, which is ultimately going to make the gain. And in the spirit of being a math nerd, I've made a calculator to kind of handle this strategy if it's something you're interested in following. I've made two versions of it. We'll get into this in a little bit later part of the video. But to basically kind of outline what's going on with the strategy and what I've observed, mostly we're going to be trading the first 2 hours of the day. You can really trade at any point during the day, but just know that the volume is going to change, and this is actually set up for the Russell 2000 E-mini. So you may need to make slight modifications if you're trading another pair. I'm going to stick with the Russell as I've had uh, the best performance on that in the history. The S&P 500 tends to be a little bit choppy, so this works out much better for the Russell. So I'll look at the NASDAQ and of course the S&P E-minis later to try to see any other variations. But judging on just the Russell 2000, the first thing we're going to do, and we're going to approach this with any type of instrument or setup, including futures, forex, anything, basically anything you want to trade. So you're basically just going to observe the actual moves themselves. You're going to observe the individual candles. Really, that's where you want to start. Is you want to observe the overall sizes of of each candle that's made. So these are making between about 3 to 4 on each candle. Some are making 2. But this overall move, which is part of step 2, you just see the overall full distances. And that's going to tie into step 4 here in just a moment. But observe the full distances. So in this case, we're doing, I need to set this actually as ticks, because ticks are the ultimate of what we're going to be looking for. And notice how we're getting quite a bit of travel overall in relation to ticks. So this is kind of leading up to the next part of it. But what we're going to do is we're going to set the 1-to-1 ratio based on kind of an average of what we're doing. So we know we've got about 2 to 3 pips for our target. So we're also going to set that as our risk. And then we have to take into account that each contract is going to cost us a little money whether we win or lose. So what we want to do is take the tick value, or we want to just add a few ticks to our target side, but we want to leave the stop distance the same. Or we want to take the tick value and make it enough ticks to where it will cover the cost of the commission. So in this case, I have $1.42 round trip on the Russell, and each tick is worth 50 cents a piece on an E-mini single contract. So I need 3 ticks to make $1.50 to cover that trading cost. So I'm going to add that into the actual target side of the trade. So the stop will remain that 2 points, which is kind of what we observed a good average to be. And the profit is going to be a 1-to-1 plus our 3 points to cover our cost of trading. This is going to balance out to where it will create close to even as long as we're hitting along that minimum hit rate. and we'll get into the calculator part of it next. But basically, once you have that set up, then we're going to go and trade using the overall direction in play. So basically what we're going to do is observe price in horizontal groups and areas. So starting out, we have this little group and area here. We have other little smaller groups of price. So we're only looking at it in the up-down perspective. We are not going to observe any type of angle. So I know it's real common to use things like trend lines or so on and so forth, but that is not what we want to look at. We basically want to observe the move itself. So let me get a good color here. So basically this whole move that we're looking at, we want to look at that as price just literally went from here to here. So, and now from here, it is moving from here to down here. And then it moved from there to here. We're only looking at it in an up-down level. So let me clear these out of the way and just show another couple of examples. So here we have a little bit of an area, and as price breaks out of that area, typically you can trust and take that trade. I did end up taking that one and ended up coming up short a little bit, but then we have the reverse. We're going back in. So now we're starting to get a common fall, and if you take the short, of course, 2 pips takes target down here. So the whole idea is we're going to either use the breakout. So in this case here, we have some examples. We could try taking that breakout there. We could also try to take this break down here. And then we don't really have too many clear breaks on down, other than maybe right in here might be one of those little situations. So we have a little bit of an area. We have the break, so we could immediately jump in on the break, allow for 2 points, and take the target. Then we have the same situation again here, where we have sort of a consolidation area and then break. So same situation. And then if we're observing a color change, so like for example here where it's on a strong downward trend, basically what this is indicating is when you have the strong break, you wait for the color to come back opposite of where it's breaking down. So we had a downward break, and you can either enter directly on the break or wait for this green candle. As soon as this green candle closes, you would enter short on that green candle. And same here, if you were to enter short at the close of this green candle, enter short at the close of this green candle. And in all those situations, that is 3 trades that worked out. You can also enter short on this candle, have it work out. Enter short on this candle and have it work out. So these are going to give several consistent entries that might work. And then for the same here, we're starting to break strong upward. And even though we're kind of showing a downward trend, you may not want to take that. You may want to stick with the most common candle or most common direction, because we don't really have anything directly or around here, so that would be considered an out in the open type trade. So when you're doing the out in the open style trade, you kind of want to go with that most common direction, and our most common direction is still black at this point, so you could wait for the show of a continuation down in this case, or you could actually notice that price is starting to consolidate here, enter on the break here, or in this case it didn't come back. So you kind of have to pick and choose and be careful, but these are going to be your most common ways of entering the trade. So in the case of breaking out, like that was a case where we had a small breakout and it barely went, and in that case there we had another breakout, and I tried to take a second entry off of this candle here and it came up just shy, but that only happened once. But over time we have a couple of different ways we can kind of make adjustments. We're only going to make adjustments to our overall bracket size. So if we increase our stop size, of course we'll need to increase our target. But if you're having a lot of issues with the target not being reached, then you'll decrease the target size, but of course that will also decrease your stop size. So there's only two possibilities of adjustment, but we want to try to stick to that 1-to-1 ratio and then add our cost to our target, because that will make a slightly better R rate in our favor. So that's pretty much the entire situation set up in one single screenshot. Now I do have this little note here uh, in relation to the ATR. This is one other possible method for step one if you want to bypass just trying to observe candles like that and just look at an overall ATR, as that's a pretty common method for trying to determine your stops and targets. You can basically observe the time. So New York session is from 9:30 until approximately 2:30, or no, 4 o'clock. But I have to stop at 3 o'clock for the central time close. But you'll want to observe the time in the market of when it's typically going and just find an average. But we want to set this average true range to a period of 1, and this will give us the actual range of each individual candle. So in this case here, we have 5.22 points. That candle by itself moved 5.22 total points in full range. The very next candle only moved 2.26 or 2.25. Oh, it really should be 2.2. It does still kind of take into effect an average of the last candle, but it's kind of similar to setting a moving average to a period of 1, and that'll be the same as basically plotting the chart as a line chart. So we'll apply the average true range, set it to a period of 1, and then just take the kind of average or most common little zone or area between the top and bottom. So we have a high of 5, but we have a low of about a half, and we spend most of our time towards the bottom, so I would say the average is somewhere around 2, and that's what I'm kind of using here. That's also the kind of the same of what I ended up doing here. I took that average candle size and kind of made the overall average to be 2 that way as well. So a couple different methods to work out that stop. So now if you wanted to just run with that, that is the entire strategy in a nutshell. And the part that is kind of critical, I wish it would stop going to OCO. The part that is critical, though, is to make sure that your win rate is higher than your minimum break-even rate. So that's your whole goal of the strategy, as long as you're hitting above your minimum break-even. And this is actually counted with the cost involved. As long as you're hitting better than that minimum break-even, you should be making money. So as you're using this calculator, it'll start out with 0 as the win and loss. Once you've made about 6 to 7 trades, you want to try to make sure that your hit rate is close to or better than that minimum break even. If it's a noticeable amount or a significant amount lower, such as in the low 40s, you may want to consider reevaluation of your entry style. Now, on every trade, we only want to take the entry, and then it's completely hands off. We do no stop adjustments at all. The main reason being is intuition is wrong 70% of the time, and any instinct that you feel like you may have that you want to close this trade early, either take profits early or try to close the position out in a small loss just to eliminate the loss. The only reason you want to do that is because your brain has a natural instinct to protect us as a human being. It's a natural human emotion, and there's no way you can get around it or eliminate it. So the only way the only option that leaves us as traders being in the market with our money on the line, the only thing we can do is set our target, set our stop, and let it play out completely 100% of the way. There are several times where you're going to end up in a situation like you may think, okay, you're using your color change entry in this situation, and this actually happened during this test as the final trade. You take the color change, so on this green candle here, I went short. That put the stop here. Now I saw a big push up again, and it cleared upwards like it might reverse, but we're going down. And my instinct was, okay, save the loss. I got to get out of it. So for 5 minutes, I was constantly feeling like I had to get out of it and switch to long. So had I done that, it would have been a double loss when in fact I did the proper strategy, survived the stop loss, and ultimately came out 1-2 points and we're good to go. So I actually ultimately won that trade instead of letting my instinct of protection, my brain trying to protect me from taking that loss. It's trying to protect me from losing any gains while we're in profit. And it's much easier to close out in profit early because it's a profit. But that is counterintuitive against the strategy overall. So that's your final objective on the strategy, and we'll go ahead and move into the calculator portion of it. You can actually get this from the link in the description. But let me go ahead and size this out and get this out of our way because we do not need that portion anymore. And now later on, I'm probably going to put this in a Python program because I'm actually working on learning Python. So I may end up doing a Python app for PC and possibly even Mac. I don't have a Mac computer, so I won't be able to test it, but I'll try to make an app for it to be compatible. But what you're going to set up first is the pair that you're trading. So for the Russell 2000, we're going to take a look at how many actual ticks per point. So notice that each whole value is a point. So we have 39, 2140, 2141, and there are actually 10 little slots for price to be in between there. Those are actually referred to as the ticks. Now I have each line set up as a point, but there are 10 ticks per single point in this pair. So, or in this instrument. So we'll set that tick count to 10 because we have 10 ticks inside that point. And then for the point value, because we're trading on the E-mini, these are $5 per single point. So we put that in as our point value, and then I have $1.42 is my contract fee. And then for each trade, I'm going to be using one contract, so that gives our tick value and total trade cost here in this slot. And then the next section, we're just going to set up the trade that we're using for the current testing and situation that I was using. I was coming out with a 0.88. I was using 20 points for the stop and 20 points for the target, plus 3 ticks to cover the cost of commission. Now, if we were to add that to the stop side, for example, if we were to subtract for the stop side, it would make it a little bit more difficult for us to get a clean trade. We'd get stopped out a little bit more often because that stop size got reduced. And then notice the R of gain here. Right now it's set to 1 to 0.88. If we subtract those 3 points from the stop side, then we end up with a 0.86. So it's slightly lower. So by leaving your stop size and adding that to the gain, you get a slightly better R ratio. Now, of course, you would want to take out from both sides and try to get these numbers as close together as possible to get 1-to-1. But ultimately, that's going to put you at a disadvantage for trying to run this strategy because we determined that about 2-to-3 is a good size. Another way you could possibly look at your sizing is to look at the average size of these little consolidation blocks. These little areas, they're about 2 pips wide as well. So or 2 points wide as well. So kind of close there. So you could also use that as an average. So as long as you're getting in by these entry points, or if you absolutely must take an entry here, try to get in. If you're thinking it's going to go long, try to get in on the bottom. And then if you think it's going to continue short, try to get in on the top side. So that way you give yourself the most free space outside of that little consolidation area for it to wick and come back in. Otherwise, if you try to sell down here or buy up there, say for example you tried to buy up here, that wick would have knocked you out and you would have ended up being right in the end anyway. So if you're trying to place trades in a sideways market like this, bottom for long, top for sell, and then any other situation you'll want to take the break as soon as it happens, or you want to get in immediately on that candle close if you're using a color change type entry. Okay, and this will basically show you what you're getting and your R ratio for that trade, including your costs. And then from there, all you need to do is increase your tick, increase your tally count of every time you win, every time you lose, you just increase it. And then all you have to do is make sure that your break even and hit rate, put this back to normal, as long as this is staying green, you're above your minimum hit rate, you're making money. But if we continue taking losses, now suddenly we're dropping below our minimum hit rate and our estimated P&L. If we didn't change any of these values during the course of the trade, we would be looking at about $1.28 of loss. So we would start losing just by only winning a couple more than what we lost. So we want to try to use the entries to try to work out a slight advantage to giving us our edge in the market. A lot of that edge can actually come from momentum. So when you get these strong breakout candles, a lot of times that's a good indication that it's going to continue in that direction. I've tried doing the stop at basically going past the wick. It makes things a lot harder, and then it also puts your stop much more in a much more susceptible place to being hit. Whereas if you take the color change entry or you take an immediate break out of a level, you're much more likely to come out on top. And then when you're using most common candle for direction, so we notice we have a lot of black candles. So if you're going short, you're more than likely going to come out right. And then in this situation, we have more green candles, starting to show more green out of consolidation. A lot of the most recent is green. So we could end up taking long and more than likely come out correct. So that's just a very easy way to increase your advantage. But as long as you start to win and continue winning more than you're losing, even by a small bit, you can still make that small amount. And then once you are pretty comfortable with that and got some pretty consistent practice sessions, I've got a couple of days in now, I'm going to run a few more over the weekend, then you will actually look to increase your sizing by contract control. And now notice the difference in just how quick we can make effects. We're going to clearly pay a lot more in fees because we're taking more trades, but as long as this hit rate stays above the minimum hit rate, we're going to make money. And that's the whole objective of the game. We're going to take losses. As long as we can take fewer losses than wins, even by a small amount, we're going to ultimately come out in the end. And if we end up doing poorly, then it's going to be a slightly less significant loss versus taking major loss streaks in a row and not ever winning anything at all because we have no technical advantage. So in futures, especially if you don't have somewhat of a decent grip over a strategy that can allow you to get better than 30 or 40%, it's going to be very difficult to get a lot of 1 to 3 or 1 to 4 risk reward type trades just because of the natural movement and just because of the natural point value for the leverage. So um, it's kind of better to keep a tight stop, but if you're doing that, you're going to need to search for some type of way to get a great entry in order to work with that tight stop. Otherwise, you could take serious losses on a bad day. So even in this case here, if we were having a very rough day and I had only won like 6 or 7 and or 5 or so and 8, and I've already made 13 trades and my hit rate is at 38%, it might be a good idea to step out of the market and only take a small loss of $40. So after you've got this set up here, the only thing you need to worry about is win and loss. If you're using the Excel sheet, the buttons will be included and they'll work. You have buttons here for your stop size, buttons for the target, button for contract, and then you can type in on these areas here. And convention, anything that is in white or cells that you want to edit, anything in color is going to have a math equation or some kind of automatic calculation figured in there. Now the bottom section is just for an estimate. It's not going to be 100% correct, especially if you make small changes throughout the course of the day. Like if you're doing some troubleshooting and you feel like you need to increase your stop size, it's going to affect this estimate. So that's not a real complicated formula for estimate. It just takes what you have set and compares it with your win and loss. So not real complicated, and it'll also count up the fees based on how many contracts you use. So that's not overly complicated, or it's just more or less for estimation. But mainly what you're going to worry about is just setting up your instrument that you're trading with the point value, how many ticks are in it, and how much you're paying your broker to trade that one time round trip. Then how many contracts you're going to use. Set in your stop size, your target size, add in enough to cover for your commission, and then from there, keep your win and loss rate above your minimum break even hit rate. And you're going to want at least 3 to 4 trades or you're going to want at least 6 to 8 trades or so before you start really making a determination if you're using this type of strategy. Because, of course, when you have only a couple losses and 1 win, this says you are doing very terrible, but you're really just getting started. So you want to have a few trades under and see how you're doing. And if you end up doing something like this and just end up staying somewhere near break even and just keep doing back and forth on losses, then you're going to stay pretty close to where you started. But eventually you're going to have to start out winning your losses, or it may be a good time to stop. So by the time you reach about 8 to 10 trades, you can generally have a good idea if it's a good day or bad day. And if it's a bad day, you can stop without taking a severe hit to your loss rate. So if I'm taking 13 trades or 12 trades so far, and it seems like I'm just losing over and over and over again, and I just got lucky and got the win, I may want to cut out there and just call it a day because we're not doing so well. But if it's going the other way around, we may want to continue and see if we can get a little bit higher hit rate and keep going and see where we end up after a while, and ultimately try to make 1 to 2% for gain on the account. So I may actually end up having to use 2 contracts in order to reach that because a $50,000 account, so I may actually end up having to use just a little bit more. Have to use I may actually want to use somewhere around 3 to 4 once I have a solid grasp and good practice with this strategy. So through the weekend, I'm just going to go through with 1 contract and make sure I have a good, solid, consistent, repeatable result. And then once I reset the account Monday, we'll start with 2 or 3 contracts even, because that way it'll give us an opportunity to reach that target in a reasonable amount of time, because I will be getting charged monthly. It does cover certain benefits and things like data data subscriptions. You have to subscribe to different markets to get data and get real-time live price. So all in all, it's not too bad of a deal. But it is something to keep in mind, so we don't want to take too long to get this going and finished out. And speaking of time to finish things out, I'm going to go ahead and wrap this video up here. I'll leave links to the calculator. If you get the Google Sheet version, you'll have to basically type in everything manually. It does actually include a little bit of help to kind of explain everything on each part. And if you for either one, the Excel or the Google Sheet, you'll have to click File, download, and make a copy, or you can actually download it as an XLS for Excel, or you can hit make a copy and that'll copy it over into your Google Drive. But if you do the Excel sheet, you'll have to download a copy of that before you'll be able to make edits. And just remember, only make edits or changes to the white boxes. All the rest that are in color are automatically calculated. And for the example, if you're using the Google Sheet, you'll have to manually change your values on each. So if you lose, you'll have to increase it by 1 each time, and then we'll do 14. And that will gradually take your numbers and work them out. And I'm thinking we might have something broken here. Okay, it did not copy the formulas, so I will have to use the Google Sheets later. I'll remove that link for now. Right now, we'll just have to use the Excel. But I will get the link up once I get the formulas put in. It wouldn't let me copy paste it. So once I get the formulas worked back into the Google Sheet, I'll have a Google Sheet set up for you. For now, just grab a copy of the Excel sheet, give it a quick setup and test run if you like. I'm feeling pretty confident with those rules and setup. Everything seems to be pretty flexible and pretty usable overall. Once you get through 1, 2, and 3, it's pretty much just repeating over and over part number 4 and just observe the little troubleshooting as we go along to make slight adjustments and adaptations, because one day the market will move slow, one day the market will move fast. So some days we may need to go with 3 points on each side, and other days we may need to go with 1.7 points on each side. But we don't want to get too small, of course, because we've got to make sure that regardless of if we take a 20 tick target or a 50 tick target, we're still losing 3 ticks for commission. So sometimes those really tight and small targets are not always good. It's always best to try to get at least a minimum amount. In the case of the Russell, we want to get at least 20 ticks or so to make this really worth it. But I'm going to wrap this up and I will go practice. It would be a good idea to go do the same as well. If you're using NinjaTrader and you have an open account, you can go into the simulation and playback and download and replay historical data. That's my current back testing software for futures. Just make sure you have your trade calls set up in NinjaTrader because they don't do that naturally. But off to practice, and for now it's a little late, so I'm going to upload this and then take a nap and get some more practice session in over the weekend and get ready to come back Monday and make a strong positive impact on this week. But that's going to wrap it up, and I'll catch you on the next one.